Okay, good night everybody. Today is what's today? It says February 24th. Yeah, February 24th, 2016. Okay, so today I want to just go over some of the ways that I trade. A lot of people go you know, they continuously ask me, "Hey, do you just trade off candles? Are you looking at your moving averages? What do what's your focus or what's the most important thing that you're looking at?" But I'm gonna run through a few things. This is my chart that I usually show you guys, because it's the most simplest aspect of what I can show you guys. If I really went into what I actually trade off of, it probably will confuse the hell out of you guys, and maybe I'll give you guys a little glimpse of that. But this is what I pretty much show you guys. So basically, I'll run down the things that I have comprised into my trading over. Well, I guess I gotta say over the years, but it's only really been a few years, right? So first of all, candlesticks. You know that I'm really good into my candlesticks, and I've really comprised a lot of knowledge into how they work and how they react in the charts. And I know them, by name, by just visually seeing them, by seeing them form. I know how the volume reacts to what kind of candle should be formed or will be formed at a certain point. So I'm really good at my candlesticks. So that's my first thing that I'm good at. So the second thing that I use as one of my tools, I guess I'll label them as tools, right? The second thing that I'm used to using on my charts are moving averages. A lot of traders don't use moving averages. A lot of traders think that they clutter charts, and maybe they do, but for the most part, if you're a new trader or even an experienced trader, I use moving averages. I use my 8 and my 13 and VWAP, and I actually do use on my side chart that I have. I do use like the 50 and the 200 also. So that way I can see a bigger move on a bigger scale. And obviously, my third thing that I use is I use a lot of trends. Obviously, downtrends, uptrends, that sort of stuff. So I use a lot of trends in my general trading. I do also use formations, a lot of formations, triangles, flags, pennants, the whole nine. So I'm continuously using patterns, formations, head and shoulders, stuff like that, double tops, double bottoms, channel trades, diamond formations, inverted head and shoulders. Whatever formations that I know of, and you can know a million different formations, honestly. But there are only basic ones that you really need to learn or need to know. I also know quite a bit about the L2, and honestly, as I go over this in the chat a lot, the L2 factor is really simple. You really just need to know who's buying, who's selling, who wants it more, and who wanna dump it more. Really, it's that the L2 is just I guess a numerical, form of the emotions that traders are feeling. At a certain point, like a certain point in this chart over here, you'd say that, like, okay, so you can see from this volume over here and this bar over here that, okay, the traders got tired of this chart going up, 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 up here. And so, so at this exact point, I don't have an L2, running off of this because it's not live. But at this exact point, I could basically say without a doubt that there were more sellers than there were buyers at this point of the chart, or there were less buyers than there were, say, down here, and coming up into this range, there were less buyers than there were, in this range over here. Obviously the volume would tell you that too, that the buyers were obviously dying off, and there was one more push here, but that was the flag push breakout here. But as it went higher up, you see that even though this size of candle was relatively around the same size, the actual volume of the buyers coming in was a lot less than all of these candles over here. So you can tell just from this candle and this volume here that there were less buyers, even though the L2 was probably saying say 2500 to 100, on the aggregate. Even though it probably was saying that where there are more buyers, the volume of the accumulative buyers were less than say in this area over here. So at this point over here, you can see that these two candles, for example, the volume was already dying off on this side over here. So that was just a telltale sign that obviously the sellers were starting to sharpen up their knives a little bit and get ready for a short side. So that's another tool that I have with the L2. And then I do use Fibs. Look, I don't use Fibs like I don't sit here and I really, what the hell, I don't sit here and plot lines like that. I don't do that during the day. You never see me putting up a fib, but I do understand the entire reach of it, where there's a certain percentage of pullbacks that you're looking for, and just to go over, in a nutshell, what fibs actually, how they actually work is just basically you're plugging in from a low area to like a high area, especially like in a parabolic move or something, and then you want to see on the pullback how much it pulls back, right? So these numbers just represents the percentage of this entire move here and the pullback. So there are really a couple levels that are really known on the fib retracement, and that's basically like the 38.2, which is right here. They kind of just rounded out to a 38, and the 61.8, yeah, that's right here. 61.8, what they kind of usually just rounded out to a 62 level. So that's the retracements that most people are familiar with. So they're familiar with that 38 and the 68, right? 62, sorry. So what it breaks down to on the fib retracements, when it pulls back to this amount, basically the 38, right? It's like that would be like a third. A third would be 33, right? So let's say a third. So it comes back down a third. They really call this like a shallow pullback. They call this a flag type pullback. So like you see in this, if I plotted from this point to this point, right? Now that wouldn't really work in that case, because you would have to plot a low here to here, and then it would pull back here. They would call that, it would make no sense. That would be too small. Okay, I'll just stick with this. The 38 percentage pullback, they call that a shallow pullback, which is usually for flags and curl ups. Basically, what we really call a curl or a flag. That's kind of what you're looking for on that shallow pullback. And then or moderate pullback, they call it, shallow, moderate. But what you really want on a serious parabolic move, as far as a pullback goes, is you're really looking for the 62%, the 68.1 exactly. And they call this I think they call it a golden retracement. So this pullback here to 62% is called a golden retracement. So it's called a golden ratio as far as the Fibonacci world is concerned, but I kind of just eye it, honestly. I look for a pullback basically a little more than half, and obviously 62% is a little more than half. So I just kind of eyeball it, where I go, okay, if that's the entire move, like say this thing was a parabolic straight up here, and then the pullback would be there. So I just kind of look for like a little bit more than half pullback, where I can start going into something long. So not that I do use fibs, but I do understand the basics of it, and I understand the basics of how far they should come back or you know, retrace in this case. And I do use indicators. I use the MACD and the stochastics, and everybody should have a volume bar up. I don't really think that's an indicator that really should be noted. Everybody should be using some sort of a volume indicator, but obviously that's my volume indicator here, that one there, and then I do use the MACD, that's right there, and then I do use the stochastics, that's right there. A lot of people don't use indicators. A lot of people don't care to use indicators. I do. I don't think it bothers me. If it was something that was in my chart that maybe bothered me, yeah, I'd probably say, okay, well, I don't want to use it, right? But it really doesn't bother me as much. Now, there's a different kind of tool that I actually use. So that's actually about 7. Let me see. Candlesticks, moving averages, trends, formations, patterns. L2 is 5. So Fibs, I guess I can consider that because I still go through it. 6. Indicators down at the bottom. 7. And then I use price action. So that's 8. So that's 8 different things that I have comprised. And I'm sure there's more that I just don't have words for. So that's 8 different things that I've comprised that I use in my trading. And these are not labeled any specific way. They're just things that I know. And so sometimes you'll see me like just grab something somewhere and you'll say, why did I do that? You know, where did you get that from? Or it's not on that moving average. But it'll be something completely different. Maybe it'll be a fib retracement. Maybe it'll be a price action reversal area. Or maybe, you know, it could just be the L2 lit up in a different way. Maybe it could be a trend that you're not seeing. It could be a formation that you didn't even think about. It could be a lot of different things, right? It could just be a certain candlestick that I saw that I just got that I got a hunch about, you know, like I just saw a certain candle that I liked or something and I just went with it. So sometimes when you see me trading, you'll go, okay, where did you get that from, or how did you come up with that? And I just wanted to kind of make it clear that I don't just use one set of trading rules. I have trading strategies that I use. This is my strategy. This is black and white. I use the 8, the 13. I have VWAP in there, and on my side charts, I do have a chart that's connected to this that it's linked to my main chart, and this is not my main chart. It's linked to my main chart, and so it shows me a 200 and it shows me the 50 EMA also, so that way I have a bigger support or resistance area when I'm not looking at the smaller time frame where I want to see a bigger thing. Like in a move like this today, you really wanted a bigger time frame. You wanted to see a bigger moving average. So that's where like the 50 or 200 came into play, where on a move like this. Now, I was gonna, yeah. So I've never really talked much about the price action factor of trading to you guys. So I figured I should go over some of the price action stuff. So basically, you know, price action is basically. Okay, let's go into a few little things first. People that trade price action, there's actually a name for it. There's actually a way that people trade price action. Just like I trade everything, so I can't say that there's a specific way that I trade. 50 and 200 EMA, I have them, and they work well. I mean, it doesn't really matter if you use the daily chart, 5-minute chart, still applies to the same thing. So basically, I lost my train of thought. Okay, basically, there's a name for trading price action. It's called PAT. That's short for price action trading. So there's an entire group that trades purely off price action. So what it is they do not use moving averages. They do not use indicators. It's called clean chart trading or naked chart trading. So it'll look like this. Remove all indicators. Okay, so it'll look like that. So this would be considered price action trading general setup, right? So what they do is they would go back into the chart. Let's say it's a little far up. Let's do 20 days, 15 minutes. Some of them use volume and some of them don't use volume. Most don't use volume. They call it a naked chart. It's literally naked. There's nothing else but candlesticks on it. And what they'll do is, and this is part of my trading too, and I never knew there was a name for it. You know my magic lines? It's part of price action trading. Okay, and I may have picked it up over times from no, and they don't use candlestick formations. I'll tell you what they use. I may have picked this up from doing all my very early reading and understanding trading itself. I may have picked up price action trading. I don't know, kind of like not intentionally. Unintentionally, but I guess I did pick it up in a lot of ways, that more so than I understood. So basically, what it is if you can see, what I'm pinning out here are these horizontal lines. They represent obviously reversal points. They obviously represent major trend reversals. Now, when you're doing price action trading, they actually have a name for that. So a major trend reversal is called an MTR. So, like, say, for example, that would be an MTR, that would be an MTR, and there's a whole range over here where the price bounced around in there. You see that? And then it's there. So that would be like a line. So you keep putting these little lines in, and as time goes on, remember how I keep telling you guys that I do a lot of lines, and I always have lines, and you know, people always call them the magic lines, and I've gotten to calling them the magic lines myself, but they're just actually MTRs. They're major trend reversal lines. So there are points in a chart where a chart reversed strong enough. It could either be a high of day or low of day or previous high of day or previous low of day type deal, right? So now the naked chart. So let's close this in a little bit. So now that you would have lines on your charts, because a lot of on the price action trading, the PAT, it's gonna be naked, and then they're gonna have horizontal lines like this. Obviously, this is a hard chart to do a PAT off of, because you have to go back far into it, but you can obviously see that these lines here are lines that were in this range over here, right? So if you did PAT, you would have on FSLR this morning, you would have had there would definitely be one here. Sorry, I didn't put that in. Right there. Damn it. There would be one right there. Okay. So you would have had, if you did price action trading alone, you would have had this entire zone here where you should not have been getting into this trade. And I do a lot of price action trading, and there was some part of me this morning that got carried away with the fact that it gapped up. I mean, obviously it gapped up from 62 when it was at 66. I had an area here. I picked this area up here from this peak from yesterday, and when it came into that zone right there is where I started my short position on FSLR at 66. And so then it came up into this zone over here. I added, and it came up into this zone over here, and I added. When I added purely based off candles, and it was this dark cloud cover that really just gave me the assurance that I wanna. No, damn, no, this was 69. Okay, I got stopped out at 68. There was another intra smaller candle pattern. that I got into and that I was sure. I was playing the 1 minute at the time. Sorry. I was playing the 1 minute at the time because I was actually trying to candle it. Anyways, there was a candle pattern in this area here. Yeah, I was on the 1 minute. Yeah. So it was in this area here where I actually found a solid candle pattern, and even on the 5 minute you can see that these are definitely, you know, I mean, these are bearish candles over here. But I should have, and using a volume indicator, I should have seen that the price action was not ready to die off in this area here. If I let me just load back this template and I'll show you what I mean. In this area over here, when the volume came down right there, it just blasted with the new set of volume here. And that right there is where I got stopped out into this candle over here. I got stopped out at 68, I think it was. And so that blast right there, that's what did it in for me. But the fact that I still mentally was jaded with the short idea and I did not go long is my fault. Because the chart like this, I should have actually just kind of flagged it and played it on the long side. Instead, I was just continuously looking at on the short side. So, my fault, honestly, for how I traded it today. As soon as it came over this range over here, I should have basically maybe stuck with my fishing size and hindsight trading, obviously. But hindsight trading is not right. So, the way I played it, the stock gapped up, it pushed out of open. That was technically sound. I had no fear in this trade when I took it at 66 on my starter. I had no fear at all. And then it just really got out of control. And so this is the one out of 4 or 5 times where we did the gap up. Did the gap up webinar the other day, and this is one of the few times where it goes against you. It goes totally against you, and there was nothing that I can do to control this one other than, you know, hindsight trading would have been to, oh, you should have, you know, added up here, you know. That would be hindsight trading, alright, because if you were trading this pattern, and even if you're on the 5-minute, you would have added here. You probably would have gotten stopped out here, and then you would have shorted there, and then it would have probably come back and double top, so you wouldn't have gotten stopped out. You would have come into this. You would have probably added here because it's under your moving average, right? And then you would have gotten stopped out here. So in this few instances, you would have 1, 2, 3. You know, how many times would you have lost? Would you have come in here? Nah, probably not. You would have probably come in here. And then that would have been the only part that you could actually make some money on this one over here, because all the others curled up and they just pushed back, so you would have gotten stopped out. So this would have probably been the only like real candle pattern that you would have gained anything from. I mean, would you have gotten this one? I think after back-to-back losses, you probably wouldn't have played that to catch that. And then even when it pushed up here and it broke the trend, you would probably have gotten out of this position anyways, right? So if you were just playing pure candles, you probably bang, 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 lost 2-3 times, and then come back in here. I don't know. This is hindsight trading. Honestly speaking, no. You probably would have been just like me, but I stayed in it one time the whole way up till I got stopped out. And then I did not look at it again until later this afternoon. And the only reason why I got into it this afternoon was that finally I had a cross down on my moving averages, and I have a 69.60 short on FSLR, and I'm overnighting that. Yeah, you were over it. Yeah, you took 2 losses on it. I took 1. But that was enough for me to just stay away from it for a while, and then I stuck it on a side chart, and then I just waited for the cross down. And at that point, that's when I thought I was really gonna get a nice flush, and still didn't. So this chart's just really strong, and obviously I have a stop now at the top here, right there. Well, not at it, but you know, over it. So if it does push out of the open and it blasts through here, I'm not gonna be adding to it. So remember, it's all about price action too. So that's how I'm going to be playing. So anyways, for the price action traders, the PAT traders, there are no indicators. It's called a clean chart or a naked chart, and they just have price action areas, and it's totally based off of MTRs, so it's like major trend reversals. So like these lines here were obviously duplicated from MTRs previously. Now the bars, see, they don't call these. Maybe the less maybe the less studied guys would probably still call them candlesticks, but they are actually called pin bars. So what they look for is, when we call a hammer. A hammer is called a pin bar. It's a reversal candle. In their world, it's just called a pin bar. So let's look at a daily or something. I'll show you. Oh, that's complicated. 6 months. Let's clear all this junk out. Okay. So like they would go for pin bar reversals only. So like this would be a pin bar right here, which we would call a hammer. That would be a pin bar. It would be called a hammer. That would be a pin bar. It would be called a hammer. So they are only gonna look for pin bars. Mostly what I've seen is pin bars, and they call it pin bar reversals. So that would be your MTRs, your major trend reversals. And so if they took this chart here on a pin bar, it'd be basically they would take the pin bar as their hey, I want to get into this trade. But they would wait for most of the traders that I've seen. Well, it would have to, you know how we call, like, specific types of dojis, long-legged and, like shooting stars or spinning tops or whatever. They really just go into the big ones, just the big ones. So that's why they have just because remember, they have no moving averages or anything, right? So they don't care about the little ones. The little ones, I think they call inside bars. So they don't care about them. And it's a little bit, I think, a little bit off to me, because there are a lot of obviously patterns that, from my knowledge of candlesticks, that are inside, that have a lot of data in it. And they don't care for them, so they would look for pin bars only, right? But like if you see over here, that's a pin bar also, right? So I think there's some aspects of it that I can't trade off completely, because I think some of the aspects are fake. But let's go for this one, okay? See these two bars right here? This would be considered a pin bar, okay? If I was a PAT trader, a price action trader only, no moving averages, okay? No moving averages. I'm looking at this pin bar here on a straight, strong downtrend, right? So I'm looking at a pin bar here, and now what they do is they'll have an area here, okay? And you can see it if you did it on Fibs. How it would work from this line here to that line there. That's the entire bar from here top to bottom, right? What they mostly do is they go for a 50% retracement here from the top to the bottom of the pin bar. 50% down on the pin bar, that's where their order is. So say they wanted to go long off this pin bar idea, it'd be 50% under, so they would get it here at $60.08, say, and their stop would be under the bottom of the wick. So that's how they would play this right here. be a pin bar, it'd be a 50% down, that's where my entry is, and that's my stop right here. Now, is that a horrible way of trading? Not at all, because that's how I would trade this candle anyways. But I wouldn't call it, and that's why I say that I do use price action, but I don't use it like they do. I don't use, the exact formulas that they do, but I do use price action as part of my trading, and it just must have slipped into my subconscious from doing so much reading over the years, that I do use it. And I do, when a candle like this works, I do, and I keep saying it over and over and over and over in the room, try to get it as close to the bottom as you can so that your risk is least, right? Meanwhile, it's the same formula where basically you're trying to get it close to the bottom, right? But they just stick it at the 50% most of the times that I've seen. They just stick it straight at the 50%. But for me, I would try to get it close down so that my risk is still to the bottom of this candle over here. But it's if you listen to me talk a lot, you know that I always try to say get it to the top or get it to close to the bottom. It's because it's the same formula using a whole bunch of different compilations of stuff where I'm using kind of like a fib retracement, right? So I'm trying to get you to that 68th percentile, which would be the golden ratio for a fib retracement. And I'm also trying to use this pin bar, obviously, kind of subconsciously, where I want you to come into it. And then the risk is obviously here. I don't care what you use, candlesticks, naked charts. I don't care what kind of charting you use at that point. It's still basically the same formula where obviously that's your stop right there. So if you got into it and that was your entry, that's your stop. Once the next candle opens above, then your stops obviously moved up, and I would assume that you would get stopped out on this day that came straight back and just double bottomed basically and then pushed up. So what would happen here is you would actually lose out on a really nice trade. But if you did the pin bar thing here again, you would probably never get filled because it never actually came back into this zone here. So a lot of those guys actually, and I've seen it, where if you kind of maybe just YouTube it or something, you'll see that a lot of them, once there's a pin bar, they'll set their orders right here, right at the half, and they can say, well, I want to get it at $59.83, and because they used basically a formula, basically 50% or whatever, and so they'll use a formula to come into the middle here. Now what they'll do is okay, say I use this pin bar here, right? Just this one here. Okay, now this line here, say is my 50%, right? Say I got in at that price there, just for some reason I got into that price there, right? My risk here is from, let's call this 59.60 to down here, which is 57 whatever. Okay, so whatever, let's just say $2 in between here, right? So this difference here, let's call it $2. So their goal in how much they want is they're gonna want to get this chart up here, right? But their goal is usually 3 to 1. So if they risk 2, they're gonna want 6. So from $60 to $66 at this range here, they would have taken their profits, and that's how the whole thing works, right? So that zone right there, that would be their target, and that would be their risk. So it'd be most of them that I've seen is a 3 to 1, and I guess I kind of use that too subconsciously. But I do 3 to 1. I mean, you guys know that from talking to me in the room and stuff. I do 3 to 1. So if I risk 1, I want to make 3. So in this case, they risk 2, so they would make 6, and they would actually, the formula would actually work. But they had never gotten into the trade because it didn't come down 50% to get their entry. But in this case here, the formula would have been perfection. So anyways, that's how like PAT works. So they basically just do horizontal lines and pin bars, top or bottom pin bars. The other bars are called inside bars. They're really, I don't see the use for them. For me, it just more looks like haramis. And the inside bars are kind of like let me see what an inside bar would look like here. on this chart. I think it actually has to completely be inside of the other bar. Um, but for me, like this bar here, it's kind of an inside bar, but I don't know. I just think it looks like Harami's or yeah, Harami stars or whatever. But anyways, that's what PAT trading's like. So that's kind of what I've comprised into like all my aspects of trading. So a lot of times now people go, okay, how did you get that? Well, you know what? Honestly, it's because I've actually probably had a line there, and that's how I actually got into a certain trade or whatever. Um, so that those are like the all the different types of things that I know about the way that I trade. So it's really it's really a lot of stuff combined, um, that I've gathered, and I'm only in this for 3 years. I really don't know how much more there is out there, but I'm learning more. As I mean, I'm doing the trying to learn the option stuff, but that's completely aside from trading itself. But and I am interpreting news a lot better, so I don't think I'm gonna be and like a on the wire or off the wire or type trader, but I do want to understand some of that more because I really don't I don't trade off the wire. I don't even have a news feed, so I'm pure technical, and so I am trying to get a little bit understanding of it. Do I want a news feed with all the stuff on it? Nah, I just want a news feed. I think that the one that AJ has, the briefing thing, just so that I can type in a ticker and see all the information on it. Maybe just for something a reason like that, for like another tool, but not so much for trading off the wire. I don't care for it. My scanners pick up the stuff just as fast, and if they have a technical reason for it, the price action will show that anyways. So most of the trades that I take obviously are price action related, and when I see stuff off my scanner, if the L2 or something supports it, or if it's breaking a flag, formation, trend, something like that, then I'm with the trade anyways. So it doesn't really matter for me to sit there and read the news. By the time that happens, trade's done sometimes. But yeah, so that's kind of the arsenal that I have in my tool belt, which is a lot. Um, can I show how to read the L2? Well, I don't really have a live L2 here, and but maybe I can record one, or maybe even when we're in chat or something, I can just go over it a little bit. Um, do I use? Okay, is that a word? VIT? Um, a rondicator? Is that an indicator? Is that like a real indicator? Oh no, I've never even seen that. Here's what I use. That's it. Basically, I have a lot of other stuff. Um, but yeah, that's basically what you see there. Stochastics, MACD, volume, VWAP, 8, EMA, 13 EMA, auto trend lines, and a ton of horizontal lines. And if I showed you guys, you might be confused, and I may not be respected as much, but my charts are kind of crazy. So I can give you a peek if you guys are okay with that. But some of my main charts are very, very lined up, and it's just because I have all of these lines. They indicate something, like an area or like a resistance area or support area or something, and you can even see how they come into play. A lot of times they come into play, and so most of my main charts, they do have a lot of lines. You can see that they come into play quite often, and so I don't get rid of them. I just have them on my back screen. See, like this blue came all the way down to here, topped off over here, supported over here, And so there are just many charts that I have just full of lines on them, and I don't delete them. I leave them in. Obviously, you see it just pinned right there on that one. So if you go back a few days, you'll see how many lines I do have on this section here. But you can see how if for instance today's play where it pinned there was high off of yesterday, and then it came back and double topped on it there here, right? So you can see on many of my charts that I do have a lot of lines, and even with that JNUG topping over here, maybe if you go back further out, you'll see maybe where I have a reason for it. I have reasons for everything. Why don't I have a reason for that? Oh, I know. I was playing with that one today, so I probably just put in the high of day as a new line. That's probably why. But most of the lines that I do have, if I put on a 15, you'll see how many lines I actually do have, because these are just interesting points to me. So it's kind of like my own MTR, my major trend reversal points. And when on my real chart, this is my actual real trading chart. It may get a little confusing to you guys, but it's clear as day to me, where the lines actually serve one hell of a purpose for different things, like that Tesla bounce right there, or like VRX top in, or I mean, the list can go on and on from any chart. But anyways, that's just this is really my actual platform that I trade off of, and it's actually smaller than this. I just opened it up because I was playing with it this afternoon before I came on. But basically, I also have a couple other charts that I have up on the side with it, and they're the ones with the bigger moving averages on it, the 200 and the 50 and stuff, so that way I can see bigger moves. Okay, so I can pretty much so that's the things that I have comprised, quite a lot, honestly, and I really hope that a lot of it you guys can grasp a little piece at a time, because it's not just one thing that you should really have in your arsenal to make you a good trader. I do think that you should have a bunch of other things that you know, and not that you have to know them perfectly, honestly, and you don't have to know the names for any of these things. You just have to have an average of what they're like, or what they look like, or what you should be looking for, or what you can see. You know, I mean, like sometimes a chart would run out on you, and you'd have no idea, you know, where it should stop. But hey, if you knew candles, you would know where it would stop, right? Like say you knew candles really well, then hey, look, if I got a parabolic, what am I looking for? You know, the first thing I'm looking for, obviously, is I'm looking for, like, you know, topping candles or something. And so that's where your candlesticks come in. Or if it went up to a big point and you had some of these horizontal lines drawn from, you know, a month ago or something, and it tagged right there, then you'd say, hey, that line was there for a reason. So anything really that can help you be a better trader, who cares? My charts are really, I can clean this chart up completely. I can clean this chart up completely and still be able to trade. I can trade purely off candles. I can totally just make this chart black and trade purely off these two moving averages. I can trade purely off my L2 if I had to. So, and I've done that once actually. My chart froze and my L2 was still working, and I was in the trade, and I ended up doing the whole trade with just my L2. It was scary as hell because I was actually in the trade already. But as the L2 was moving up and there was more buyers than sellers, I just kept moving my stops up. And once I saw the L2 flashed that they were sellers in sight, I sold it. I didn't even know where it was at. I didn't have a chart or anything. I was purely on my L2. I don't know, all my screens froze up that day, and I was already in a trade. So I ended up having to sell through my L2 alone. But yep, so that's basically what I'm into. So it's basically like 8 things that I do: candlesticks, moving averages, trends, formations, L2, Fibonacci in some way, that PAT, price action trade in. I use my indicators, so it's 8, and that's a lot. All right. So hopefully, anyways, hopefully some of it might help you. Maybe there's one thing that you might want to use or master. Not saying that I've mastered all of them, but I've gotten a good handle of all of them. So wherever my training is necessary, or wherever I see a pattern or a formation or an L2 or anything else, wherever I see it and I can nail it, I nail it. So I don't wait for special reasons to do things. I've taught you guys the moving average crossover, and if you did use it on WTW today, obviously you would have scored big time on this one. But it was just that's just one of the things that I do, but I do a lot of other things. So just try to keep up, I guess, because when I do trade very aggressively, and when I get something, it's because it's at the exact point that I want it or I don't want it. So when I take an entry, it's either there or nowhere else. So I don't just randomly take, if I see something going up, I don't just randomly just jump in. I jump in for reasons only, and it's got to be a formation or a pullback or a moving average or a trend break or something like that. So when I do trade, sometimes it's very aggressive, but I know that you guys will eventually pick up most of the stuff that I do try to share with you. So anyways, I'm gonna stop recording. Hopefully a lot of this was helpful, if not confusing, but I'm gonna stop recording now.